Now, let us start with the first slide, that is basics of commodities. What is the commodity? Okay, this basics and also I'll be finishing faster. Even though I know that many of you may be first time learning something on commodity trading, but believe me, you don't have to learn so deep into the commodity trading, crude oil and all this. Just basics is enough. Most important when you're trading crude oil is that how to read chart and data are important. How to read data, how to read the data, how to read the chart strategies. Those are very important. Basics are important just as a foundation to know what is crude oil, right? What is types of crude oil, what is commodity market. So that is why this will be basics. I will be going faster. Okay. So why commodity market? When you already have a stock market, why commodity market is traded? And the answer is commodity market. If you don't know, is the oldest trading market in the world. Nifty, Bank Nifty, Fin Nifty, Sensex, Mid Cap, right? You must be thinking that is very old. No, that is not the old. The oldest market in the world. I'm not only talking about India. Oldest market in the world is commodity market. You know candlestick, right? You know candlestick is invented by some Japanese trader. Okay, candlestick is invented by a Japanese trader, not 10 or 20 years back. It was like almost they say that almost in 17th century, more than 300 years back, this candlestick was invented in trading. It was invented by a Japanese trader who used to trade in rice. So that means he was a rice commodity trader and he has invented that candlestick in 17th century. You can imagine how long commodity market is there in the world. It's not about commodity mean I'm not talking about crude oil. Commodity mean anything, agri or non-agri. Okay, so rice, wheat, cotton comes under agri commodities. So I'm talking about that. Okay, so that is the commodity market is the oldest market in the world. Most successful traders in the Western world are from commodity market. In the Western countries, you must have heard of some very popular names, successful traders like Jesse Livermore or W.D. Gann, right? There are many successful traders in the Western world, and if you read their books or if you read about them in the Google and all this, they will keep mentioning about the how they have traded soybean, how they have traded cotton, how they have traded palm oil, everything they will be discussing in their books. So that means commodity market they were trading many years back, 100 years back and all. So that means commodity trading is oldest trading in the world. Okay. Next is commodity market tend to trade for a very long time based on supply and demand. When I say about the supply demand, I'm not talking about how we discuss in Nifty Bank Nifty. Okay, there is a supply here candlestick took resistance, there is a demand here this candlestick bounce. Not about that supply demand. Okay, so that is why it based on supply demand. So whenever there is a demand, what happens? Price keeps going up, right? Like everybody knows that when there is a huge demand, anything price will keep going up. When there is a huge supply, that means there is no demand. What happens? Price keeps going down. So that is how commodity trading market works purely based on supply and demand. And when I'm talking about, it tends to trade very for a very long time based on supply and demand. Means something like this. One thing you'll see when you're trading commodity trading, you'll see that this is a bullish candle. Okay, you'll see this. In Nifty Bank Nifty we talk about parabolic movement, right? So we talk about this what happens in Nifty Bank Nifty. Very rarely it happens whenever there is a news, right? In normal how market moves in Nifty Bank Nifty. It goes up, comes down, goes up, comes down, goes up. That is how Nifty Bank Nifty moves, right? The commodity can also sometimes can go like this. That means it can keep going in a trend without making a very candle for a very long time. If there is a huge demand, if there is a huge supply, it can keep falling like a nine pin with a big bearish candle, keep falling like this. That all happens in crude oil. That is what I mean to say that crude oil have tendency to trend for a very long time based on supply and demand. So that is why it's a good opportunity for directional based traders. That means if you are a directional based trader, what we do? I'm a directional based trader. You know that most of my videos and all this what I post and my courses also when I discuss about the strategies, most of the time it's a directional based trading, right? Taking a bullish position or taking a bearish position, that is what known as directional based. So if you are also a directional based trader, then crude oil is a very good instrument for you to trade because it can goes in a direction. If your direction is right, keep going up one direction. Another thing is that when you are trading crude oil, unlike in stocks, very few instruments to focus on commodity market. I said in my earlier YouTube videos also many times I say that Nifty Bank Nifty is my favorite instrument to trade. Why I used to say that compared to even trading stocks, even though I trade in stocks, but for me most favorite is Nifty Bank Nifty. I used to say that not now, 3 4 years back only I used to tell that in my videos. Why? Because when you're trading in indices, Nifty Bank Nifty, you don't have to worry about hundreds of thousands of stocks, right? Only focus on Nifty Bank Nifty. That is easier, right? Scanning so many stocks and all this. It's a time-taking process, and always it is better to have a few instrument to trade so that you focus only on that instrument. Same way when you are trading commodity also, only few instrument to focus. Yes, commodity also there are so many commodities you can trade. But I suggest crude oil, gold, silver, natural gas. These are the four instruments which are very commonly traded by traders and very popular. Okay, so that is why when you are trading in commodities, just 4 5 instruments only you have to keep a watch on. Highly transparent market, less chance of price manipulation due to global exposure and large scale participation. When you are trading in stock market, some stocks highly manipulated, right? Because operator can manipulate it in such a way that he may show you bullish for few days, and once you start buying, and suddenly it can reverse and he can offload all his position. And the stocks can keep falling with a hitting the lower circuit for many days. And it happened in the past in Indian market, right? If you keep a track on stock market, you know that this is very common. That is known as pump and dump in stock market, right? They will pump first and you start buying, then they will dump it. Manipulation is very common in stock market, but when it comes to commodity market, it is very less. Why? Because it is a highly transparent market. Why it is highly transparent? Because it has a global exposure. It's not that only we Indians are trading crude oil, right? Same instrument traded everywhere in the country. US, China, Japan, Russia, Africa, Australia, New Zealand. Entire world trades that same instrument. Okay, same crude oil. Whatever you are seeing in the chart, maybe it is traded on MCX, Indian Exchange. But same crude oil is only. That is not a different crude oil which American traders trading and Indian traders trading. It's same instrument. Okay, unlike Nifty Bank Nifty, which is only limited to Indian market, commodities are have global exposure and large scale participation. So that is why highly impossible to manipulate these commodities. Okay, so that is why commodities are known to be highly transparent market. Commodity market known as leading indicator and stock market known as lagging indicator. And this is useful information for a trader who is a long-term investor. Why it is known as commodities as a leading indicator and stock market as a lagging indicator? Now, just for you to example, suppose assume that crude oil price keeps start going up. Okay, crude oil price suddenly started rallying and started going up. Okay, it's not coming down and it keeps going up, going up, going up. How it will affect the stock market? For that, you have to know which product based on crude oil. First product comes to your mind is paint, right? If you know the paint industry uses lot of crude oil. So that's why whenever crude oil price is going up, so that means if you are an investor, you know that okay, this quarter crude oil price going up, so that is not good for paint companies. Why? When there is a raw material price is going up, company has to purchase at higher rate. When a company purchases at higher rate, what happens? Profitability goes down, right? That company profitability goes down, margin goes down. So that is why this crude oil going up means paint companies it can affect. Suppose wheat, you know that wheat also traded in commodity market. Assume that wheat price starts going up. How it can affect the stock market? And when wheat price going up, how it will affect? Because raw material is going up. So it is affecting wheat product companies because their raw material price goes up means their profitability goes down. So long-term investor what he does? Oh, currently wheat price is going up this quarter. That means it is not good for wheat product companies because it can affect the profitability. So that means I should avoid investing in this kind of companies, right? I'm just giving you example. It's not a buy sell recommendation of any stocks or anything. Just I'm giving you example how commodity market known as leading indicator and stock market known as lagging indicator, right? Now you know that why knowing the commodity price can be useful information for long-term investors. Now another thing, protection against the inflation. Commodity like gold, silver tend to perform better when inflation is rising and stock market is falling. When stock market falls, one of the reasons stock market is falling maybe inflation price is going up. When inflation is going up, it is adverse to stock market. Stock market can start going up, right? It is not good for any country when inflation is going up. That means everything becomes expensive, right? So that is why inflation is not good for stock market, but good for gold and silver. Commodity market can be used as a hedge against market crash because gold and silver generally have negative correlation with the stock market. So that means what? That means you see that when stock market is falling like this, you will see that gold and silver is going up. Okay, negative correlation. That means stock market is falling, everything is falling, but gold and silver is going up. So that is why negative correlation. Because what happens is that when stock market is crashing, most of the people have tendency to take out their investment, right? Because they are fearful that their investment is going down, market is going down, price is going down. Under the fear, they remove their investment and where they normally put in gold and silver. So that is why gold is known to be, you know, that safe haven, right? Gold will be always known to be safe haven. That's why people have tendency to invest in gold when market is crashing. So that is why it can be used as a hedge. So that is not just the basics why commodity market is important everything.